Welcome, everyone. In this episode, we're going to go over March sales for BBS, and we'll talk about some of the reporting improvements Amazon has made for book sales. And then I'm going to talk about a new product that I've launched, and also we'll get into the core topic for the post, which is continuing the financial statement series of episodes, and this one is going to be about the income statement. So moving into March sales for BBS, which is Bitesize Business School. This was another month that grew over the month before it. So a continuing month-over-month growth. And this was nearly 2 times the sales of February. And the majority of sales are coming out of courses that I'm doing right now on Udemy and also SkillFeed. And then the remaining sales are made up from Audible, my audiobook, and also from book sales. And I'm continuing to push pretty hard into courses, creating more content for courses. And right now my schedule is going to be pretty tight going into the end of May, which is going to not allow me to create as much product as I would like. So what's out there is going to have to try and make up any ground that I would not be able to otherwise make up with new content. So it's probably going to be a little difficult to continue growth in the short term until I've got more time that I can contribute to producing more content. But I can already tell you that April sales are going to be very good. So let's get into what happened with March. So moving on to a new product that I released, which was an iBook. So this is for iTunes, and iBooks are basically media-heavy books. You can have video, audio, interaction, and they're sold in their own section on iTunes, Apple's iTunes. I released a book based off of one of my Udemy courses, Photoshop Accelerated for Beginners. And I took some of the first half of the course content and translated that into an iBook and began selling that on iTunes. Right now, I'm mainly on Amazon. That's where the majority of my sales come from. Then iTunes, then Barnes & Noble. What I did as well is I've moved out of Smashwords, and now I'm directly going to Barnes & Nobles and directly to iTunes. So that cuts out the middleman and cuts out any commissions the middleman might take, and it allows me to quickly update my books and prices on iTunes and Barnes & Noble, and also to make any content changes I want. There's no delays or anything, and you get to work directly with those vendors or distributors and understand how the process works. So in creating this iBook, which you do with iBooks Author, I happen to like that program quite a bit. I find it, I wish it would be something that you could use to create all kinds of books, but it's mainly geared towards richer books, whereas an ebook or an EPUB book, for example, is fairly simple. You don't want to make that complex because then it's just going to be difficult to distribute that kind of book. So the iBook is on the other extreme of that spectrum. It's more complex, it's a lot richer. And because it has its own authoring tool and its own distribution channel, that system is fairly closed. Whereas with an EPUB book, you can distribute to Amazon, to iTunes, to Barnes & Noble, and leaving it very simple is the best route to getting successful distribution. But with the iBook, you've got a lot of control over what's going there. I will say that the process of getting the iBook into iTunes is not a fun one. This reminds me of creating iPhone apps and distributing those into iTunes, which has gotten better recently rather. But the iBooks distribution, which you use a program called iTunes Producer, just completely falls apart when you need to update your book. what it's supposed to do is allow you to open this program and search for your book, and it will pull down all your book metadata. So it will pull down your title, your description, your pricing information that you put in there, your screenshots, your cover, the actual book file you used last time. But when you make an update to your book, that goes out the window because it erases a lot of your metadata. Your screenshots are not there. The book file sometimes is not the right book file. It turns into this huge mess. So you really have to stay on top of it and drag back in all your screenshots, your book file. So auditing yourself as to where all your screenshots are, where your iBooks file is, just keeping all that stuff organized, and maybe creating a folder for each submission or update that you're doing and marking it with a date, I found is really helpful to get around the limitations of their tool. I will say that the support you get from iBooks is very good. You can call them up on the phone and talk to them. This is not something you can do with Amazon. But in all fairness, Amazon support is very good as well, I find. You can call up iBooks. You can talk to them and tell them issues you're having. They'll try to help you with that. They want to make sure you can get around whatever the problem is and get your book into the store. And they acknowledge the issues of updating a book. So it's just an arduous process to try and update an iBook. But that's something I did in the beginning of April. But iTunes is, for me at least, is a very small market. But again, my books are not hot items, you could say, so they're not huge sellers. But iTunes is a small market, and then iBooks is a smaller market in a small market. So I wanted to try it. I wanted to see what it would be like. And it's not going to be a big seller or anything like that for me. I probably won't even create another iBook, but I'm just going to leave it. I'm going to see what happens. I wanted the experience. I wanted to know how that works. And you have to create an account for your iBooks through iTunes Connect. If you've done any iPhone programming, you have an account with iTunes Connect, but for your iBook, you have to create a completely different account. So that is another new product and another new media because it's an iBooks format. It's not the regular book format of all the other books on iTunes. iBooks get their own format and their own section. And this plays back into my growth strategy that I talked about in the last episode, which is, just to quickly summarize it, it's about creating products, multiple products, different products, in different media or formats that can be distributed across many channels and different kinds of channels. So to remove a little bit of abstractness from all of that, this is what I mean. I can sell EPUB books on Amazon. So I can write one book, sell it on Amazon. I can take the same book and sell it on Barnes & Nobles and iTunes. So I can utilize that content a lot more. I can change that book into an audio book and sell it on Audible. So that right there is a lot of potential growth because it's getting you in front of more and more people. But that's just two formats. That's the ebook and audio book. Then I've got courses. So that's another format, and it utilizes other channels, so other course marketplaces. So that's more potential growth, more potential customers, a bigger audience, a bigger base. Then bring in the iBook. So that's a new format. Again, it's another format on top of all the formats. It's also a different media distribution channel. Those right now are the current different kinds of formats of products that I've got out there and the different kind of channels that I'm utilizing. And in the immediate future, I'll continue to push hard into courses. That's my biggest revenue driver at this point. But there are some other channels that I will also be looking to utilize, and I will talk about as I move closer to those kinds of utilizations. Now, moving on to Amazon's reporting upgrade. This is something I've been looking forward to. It's not a drastic improvement, but I think it's better. In Amazon, when you want to look at your book sales, you could see a breakdown of sales by title, which is nice. But then you couldn't tell what country are they selling in unless you flip through each one, which was not a fun task. It was time consuming. So Amazon has updated that, and now you can see all your sales in one shot across all countries that you're in. But so they give and they take. What happens now is you don't know which title is making which sales. That's the problem, because it's just an aggregate. I think overall it's an improvement because you get the one view, you can see all your sales across all your countries. They also list how much you're making in each country. So everything is right there in one view. The only thing missing is the ability to break it down by titles also in that view. But you can click on the drop down for your titles and flip through it. But overall, I think it's better than what they had before. So that's the current goings on in Bitesize Business School. And in regards to sales, so I mentioned that March sales were nearly 2x of February sales. I can already say again that April sales are going to be better than they were in March. And then going into May, I believe that's also going to be pretty good. I think that's going to be better than April. So month over month just continues to increase and increase and increase, which is really good. And once my schedule frees up the end of May, I'm going to have a ton of time that I'll be able to really devote to driving the revenue drivers. Right now, mainly courses. I also want to get back into writing more books, creating audiobooks. And just to touch on one thing about audiobooks, revenue coming out of March, which I haven't gotten the breakdown yet, was fairly good. And it tells me that I picked up a number of bounties again. So those bounties are really working nicely. And Audible or ACX increased their bounties from 25 to 50. So getting more of those certainly helps. All right, so now we'll move into our main topic, continuing the financial statement series. And this one is going to get into the income statement. This is going to follow a similar format to the last episode where I talked about the balance sheet, in which I'm not going to get you bogged down into the minutia of the income statement. I'm going to hit the important points, and it's going to be more of a relaxed explanation and hopefully something that you'll get a lot of value out of. Income statement, financial intelligence for entrepreneurs. The income statement lets us know how well we did over a period of time. Unlike the balance sheet, which focuses on a specific point in time, the income statement is based on a range of time. Usually this range is monthly, quarterly, or annually. By examining the income statement, for example by month, we can determine where profits and expenses are coming from. We'll understand if specific profits and expenses are increasing or decreasing. This allows us to make adjustments to our business, hopefully enabling us to remain profitable. The many faces of profit. Profit goes by many names. Some of those names include the following: earnings, net income, net margin, gross margin, operating income, net profit, earnings per share, which is used by public companies, as well as profit per share. We'll look more closely at the meaning of profit and when it contributes to money you can deposit into the bank. But first, let's look at the structure of an income statement. The income statement structure. The income statement is composed of 3 sections. Starting from the top and working our way down, these sections are gross profit, operating profit, net profit, or net income. Same thing. Gross profit. To arrive at gross profit, which is in the first section of the income statement, we start with our sales. Sales include revenue from our products and services. Next, we subtract out costs directly related to building our products or rendering our services. This cost is known as cost of goods sold, or COGS. If the business is strictly service-based, this figure is called cost of services, or COS. COGS and COS are the cost taken out of your product or services revenue. Once these costs are subtracted from revenue, we end up with gross profit. It's also referred to as above the line. Anything below gross profit is referred to as below the line. So why is this important? Above the line refers to how much profit your product generated. Below the line is how much profit the business behind the product generated. If products are profitable, but the business behind them is not, at the end of the day, you end up with a negative income. In this case, you're paying the business to keep it running, since the business is unable to sustain itself. Not a good scenario. We need enough gross profit to pay below the line expenses. To use an analogy, an employee's salary is similar to a business's product revenue. Whereas a business must take out product cost from its revenue, an employee must remove taxes, health, Social Security, etc. from his salary. For the business, removal of product cost creates a number called gross profit. For the employee, this number is called take-home pay. However, both numbers are not what the business or employee can deposit into the bank. The employee uses take-home pay to cover monthly bills. If their take-home pay is more than their bills, the employee ultimately made a profit that month and can deposit money into their savings account. Going back to the business, its take-home pay is its gross profit, but the business still has to cover expenses associated with running the business, such as rent, electricity, and office supplies. The business uses its gross profit to cover these expenses. What's left over is similar to what an employee has left over, which the employee can deposit into the bank. For the business, there is still a little more work before they have cash, which can then be deposited into their bank. Operating profit. Operating profit is the second section of the income statement. We just touched on something above, formerly called operating profit. This is the profit a business earns from the business it is in. In other words, from its operations. Once expenses related to running the business are taken out, we have operating profit. I mentioned above that such expenses might include rent, electricity, and office supplies. These expenses are also referred to as operating expenses. Operating expenses let us know the cost of running our business. In contrast, cost of goods sold let us know the cost of making our product. Net income. As we move further down the income statement, we eventually arrive at the last line item, which is called net income or net profit. Once operating income, also called operating profit, has been determined, we need to subtract out taxes and interest expense if the business has been financed. Since taxes and interest are not related to making the product or running the business, they get their own section. Subtracting taxes and interest from operating income leaves us with net income, assuming our business made a profit. If after subtracting taxes and interest, our business made a loss, this last line item is called net loss. If we have a net profit, is that money we can deposit into the bank? The answer to this question is not so simple. It depends on the business structure or model and the type of accounting system being used. Matching principle. If the business is using a cash-based accounting system, net income is usually cash that can be deposited into the bank. However, most businesses don't use cash-based accounting. Instead, they use accrual-based accounting, which applies the matching principle. In summary, the matching principle says expenses are matched against income for that period. What exactly does it mean to match expenses to income? To simplify this answer, if you have an oddly large expense during one month, your business may show a loss for that month. But if you were able to spread that expense out over several months, thus depreciating it, it would provide for more even net income reporting. The matching principle allows us to do this. It can remove any wild swings in expenses and show more stability in our finances. An accrual accounting system is required to utilize the matching principle. Thank you for watching this episode of the Bitesize Business School Videocast, and you can find the related post at bitesizebschool.com/BBS03. And if you want to pick up a copy of Photoshop Accelerated for Beginners, you can also find a link to it in the courses section on bitesizebschool.com. Thanks again for watching, and I'd appreciate your subscription to the Bitesize Business School YouTube channel, which you can click right below any of the Bitesize Business School videos. And you'll often see this little subscribe link up here. You can subscribe by clicking there as well. And you can also subscribe to the Bitesize Business School newsletter, the website newsletter, directly from the homepage. Just type in your email address right here, and you will get the latest offering that I have, and also all my updates. All the once the podcasts come out, you'll get that update. New goings on at Bitesize Business School. It's really the best way to stay up to date with what I'm doing. And from any place on the website, you can subscribe. So below at the bottom of the page for blog posts, you can see here, you can subscribe right there as well. And to contact me, the contact link right here. Once again, thank you for watching.